Welcome to Entrepreneurs, Executives, and Eccentrics, a podcast dedicated to the stories, strategies, and secrets of remarkable individuals. Join us as we engage in enlightening conversations with intriguing entrepreneurs, accomplished executives, and fascinating eccentrics, exploring their journeys, triumphs, and the unconventional wisdom that has shaped their success. In this episode, we talk with Benjamin Schieken, founder and CEO of Fincast, a fintech company helping borrowers find stronger mortgage loan offers. We break down how mortgage shopping really works and why many borrowers overpay without knowing it. Benjamin explains how his team uses technology to create real price competition. He also shares how his past startups shaped his focus on building tools that protect and empower everyday borrowers.
Hello, Benjamin. Welcome. Tell me who you are and what you do.
Thanks, Scott, for having me. My name is Benjamin Schieken. I'm the founder and CEO of Fincast. We're a consumer fintech company that has both an intelligent shopping tool and competitive marketplace that helps borrowers find loan deals. We're focused on the mortgage loan in particular right now. So in essence, what we do is we make sure that every home buyer has a fair chance at the best deal. And we use technology to scale their efforts without effort every time. And it's been working really well. We're very excited about it.
So, because historically speaking, if I wanted a loan, I would, my wife and I would go find a house, and then we would go, we get a real estate agent, and we do all that stuff. And after the fact, like, okay, we should probably go find a loan officer, right? And actually go figure out the money part of it later, right? Things have changed lately in that typically you go find the loan first and then the house, right? And so when you're shopping for that loan, it's, well, I'm a VA or I'm a this, I'm a that. All those things, give you a lot of options. And it sounds like you're kind of streamlining those options a little bit.
Yes, to a degree, although what I'd say is we're not replacing the expertise that a professional provides to a prospective borrower, whether they're refinancing an existing home or purchasing a new one. We're really trying to empower that professional to be the professional and focus on what is the right product selection for this person. But most importantly, what we're doing is that we're empowering customers to find the best demand for that product across a very large and fragmented lender ecosystem. So the way that Fincast works, and this is where it does it a little bit differently, is you still go to a lender of your choosing. It could be the bank that you currently bank with. It could be a lender that your realtor referred you to. It could be maybe someone that you worked with previously, someone that you trust or are open to trusting. And you go through the process so that you narrow down the product selection that meets your criteria and that you qualify for the best. You mentioned VA, for example. It could be a VA loan. You try to figure out what the right loan to value is. How much do I need to borrow compared to the price or the estimated value of this property? So on and so forth. And you're right. In the process, it's mostly important today, or especially important today, I should say, to get pre-approved before you shop for homes because affordability is a challenge. And it's important to know what you can afford and where you should be spending your time, both for your sake and for your realtor's sake, so that they are working for you to get you the best deal on a home. Now, what we're talking about is getting the best deal on a loan. So once you get that offer from your lender, the CFPB, or Consumer Financial Protection Bureau, which is the government agency that actually regulates lenders and their offers, so on and so forth, in 2016, they standardized the mortgage offer from what was previously called a good faith estimate to something that is now called a loan estimate. They probably could have picked a better name, frankly, because loan estimate is really ambiguous and confusing. But a loan estimate is actually an official document. It's different than a loan summary. It's different than a fee sheet. It's different than a quote. It's different than a mortgage offer. It's a 3-page standardized offer regulated by the government that a lender's obligated to give you within 3 business days of you providing them 6 specific pieces of information that constitute an application according to the CFPB. And what the government did is they standardized the offer to make it easier for you to get multiple loan estimates and compare them apples to apples. But they didn't make it easier to actually get the loan estimates. That's an incredibly cumbersome, overwhelming process where you have 2 options today. One is you can traditional shop. You can shop around. You can call other lenders. You can, walk into different banks. You can find lenders online and email them and try to manage a process yourself where you're doing what the CFPB suggests, which is use your loan estimate, send it to different lenders and ask them if they can beat it. Or you go to a comparison shopping site, which are great resources for learning, and there's plenty of them that have been around doing largely the same thing since 1996, 1998 era. Lending Tree is one you may have heard of, or Bankrate or NerdWallet. And you provide information to them about yourself, and then you see rates and information about banks, and that data is often sold, and then you get a lot of calls, texts, and emails from these different companies. And we think that that's too overwhelming. So shopping traditionally is difficult. Comparison shopping is overwhelming. And we think that there's a better way, which we've started to prove really well, which is just get one offer. Upload that offer into our technology, our intelligent shopping tool, and we have AI that's going to authenticate, analyze, anonymize, and strategically shop it for you across a network of lenders that actually bid to beat it. We bring those real offers in real time back to you and allow you to stack rank them, not based on how much they're paying us, which is what happens today, but based on what saves you the most in accordance with your personalized savings priorities. And then really simply, you click the one that you like and you get that deal. No calls, no texts, no emails, no calling, no texting, no emailing. It's using technology to create a more efficient connection, find a better fit for the product you know you want that you've already been qualified for, so that you can make a better decision. And what we found, Scott, is pretty remarkable. And we think this is actually going to increase based on what we're seeing in trend analysis. Today, 73% of borrowers that Fincast their offer, and you'll notice we use it as a verb. We think it's something that you do. But 73% of people who Fincast an offer will find a better deal. On average, the savings per mortgage, which is a result of a rate reduction and cost reduction, is $49,500 per mortgage. We're talking about life-changing money for people. Like, that's being wasted today. I mean, today in America, $150+ billion is being wasted because borrowers can't find the best deal for the same product they're going to get anywhere in the market. It's wasted, vanished. They're overpaying. And we believe that we deserve better. And so what we've done is we've created this market efficiency that allows people to find the best deal or know that they already have the best deal with confidence and easily make that decision.
Yeah, it's interesting because it's not so typically when you go to these, I would use your site, right? Do you have a current loan estimate? That's not how normally these things work, right? You're starting from a point of reference with all the data that's already been clearly, by someone else who's already a kind of a soft approved loan, right? And then you're working your way backwards. It feels like you're kind of eliminating a lot of the BS, right? Because you're starting with a real loan offer and moving your way from there. Okay, how the hell did you get here? How did you? Are you a software developer? Do you hire? How did this happen? How did you come to this conclusion or this thesis?
Yeah, great question. And by the way, we might have to steal your words there, eliminating the BS, and use it as our tagline. I think that's a great one.
Yeah, as long as it's not intellectual property, you can own anything.
so yeah, but you nailed it there, and happy to share my journey. Just one thing to point out there is you're spot on. Like, we're focused on finding product fit, not person fit. The person fit exchange is a very expensive one for lenders and a very painful one for people. And because you've gone through the process with a lender one time, we now know what the product is, which is really what lenders care about. And we can arbitrage or make an efficient market with that at scale that aligns stakeholders in a way that saves both sides really substantial amounts of money and just eliminates the BS, as you alluded to. So how did I get here? This is my fourth tech company that I've built or run. After the first three, which were B2B SaaS companies, where we were building technology solutions for companies to solve business problems, I got to a point where I was feeling a little burnt out personally. And I was feeling a little bit unfulfilled and frankly, unenthusiastic about the why behind why were we delivering this solution to market. I lost some of the conviction that I had early on, which was largely founded in opportunism. And I decided that I needed something to align myself to the things that I invest in I build, I focus on, and most importantly, I sacrifice for. Because building a company, you got to be a little bit crazy. It's a tremendous sacrifice. This stuff is not easy. So why do it? Well, I came to a point in 2018 when I was unsuccessful at turning around a tech company that I was brought out to save. I became the turnaround CEO, and I was not successful in it. I got to a point in my personal leadership journey or learning about how to be a better leader where I realized I need to do things that feel fulfilling. And what does that mean for me? I need to positively impact people. So how do I quantify that? So when I'm looking at this world of opportunities, how do I decide what's worthy, what's not? How do I qualify and disqualify? Well, I've created this thing that I call my metric that matters. It's my personal KPI that allows me to understand, is this going to be worth it for me or is it not? So my metric that matters is, can this have a positive impact on as many people as possible? And if it doesn't, I can't do it. I just don't want to do it. And if it does, I will grind every day to make it happen because I believe we need it. Why mortgage? Why Fincast? Well, it's a funny story, but while we were winding down the company that I was unsuccessful at saving after 2 prior successful companies, it was a lot of lessons learned. But one of the biggest ones is don't turn a blind eye to opportunities that present themselves. And an opportunity that presented itself was an old friend of mine who had been in the mortgage industry for about 17 years, came to me and said, hey, I want to go out on my own and launch a mortgage branch. And said, cool. Why are you telling me? He said, I need your help. Can you do it with me? I need office space. I trust you. I like you. You're smart, whatever. It's like, yeah, but I'm kind of busy. I don't think I'm going to really want to do this full time. He's like, no worries. I got you. Let's just figure this out. It's like, cool. I got extra office space because we just shrunk our company. So we ended up spinning up this mortgage branch for a national lender in the second floor of our office. And at the time it was Santa Monica, California. And he was crushing it. Like, I was very hands off. I had no intention of being involved in the mortgage industry until I actually had to. I had no choice because what happened is COVID. And when COVID came to the world, in the US, as I think most people may know, rates dropped. When rates dropped, refis boomed. When refis boomed, we needed all hands on deck. I had to originate loans. Again, I didn't expect to, but I had to. Our team needed it. So I jumped into the trenches and was helping borrowers try to figure out how to save the most and take advantage of this low rate environment. And I realized 2 things when I was doing that. As a lender, and coming from a SaaS background where like qualification and disqualification, power-based selling, complex sales, it's all about figuring out, are you working on the right opportunity as fast as possible? I couldn't do that as a lender. I was spending so much time and resources with the borrowers that weren't qualified, were qualified but were not serious, or were qualified and serious, but they had better offers that I couldn't see because I had no transparency or intelligence around our pricing. And I was just spinning my wheels, wasting our resources, trying to be helpful to people, but not actually being helpful to the right people. And then what I realized in a real example with a real borrower that I was doing everything I could to help him, and I earned his business, I couldn't actually do the deal for him because my offer that I didn't set, by the way, I don't create the pricing, but my offer was substantially worse than another offer he got. My whole purpose of helping him was to save him money, but to give him the exact same interest rate, I would have to charge him $24,000 more than another lender would for the same product. And there's lots of reasons for that. I'm happy to explain them. But the point is, I realized that the way people shop and the way people originate is highly inefficient. Yet if we could see the products, we could see the pricing, we can make much more intelligent decisions on both sides that create an efficient market. That is what everyone wants. And so we started testing Fincast across our lender, across our borrowers, and seeing this like pent up demand for a solution to the problem that we thought existed. And then we started building.
Okay, so you start. I mean, because ultimately the people who win are the lenders, right? The lenders who do, like, if you can't comparison, here's your offer, right? They're the ones that are really kind of benefiting from this disconjoined kind of system. Does that sound right?
To a degree, I would say yes. I mean, again, like going back to real data, $154 billion is wasted because borrowers can't find the right offer for the same product across lenders. So, yes, lenders are benefiting from that opacity or friction in the shopping process. But to break it down further, Scott, I think this is really important because a core value of Fincast is we want to level the playing field. And frankly, it's not just for borrowers. What we also found is that because of the way that lenders find and reach borrowers today, only the top 5% of over 5,000 lenders are equipped and have the resources to actually reach people well. And what we found is that fantastic lenders, what we call this the long tail of lenders, like the 95% of the market that's not the top 5% biggest of them, have amazing products at amazing prices with fantastic service and years of experience, but they just can't afford to show the offer to someone that they're looking for, right? So what we did with this intelligent competitive marketplace is we leveled the playing field for more lenders so that the right lender is working with the right borrower on the right deal based on pricing right now. And that's not limited to the top 5% of biggest lenders. We level the playing field for the lender too, because 95% of them were not winning. And that was really important.
So the big lenders were the ones benefiting from this kind of disconjointed system, right? The ones that could service other people for different reasons in a better way weren't even in the darn race because they couldn't afford to get in front of them in the same way that the big lenders were.
Yeah, I would say that that's a fair summary, although I just want to caveat one thing. Like, I don't point the finger at the lenders because the big lenders are great too. And they're winning the game that's being created and played. We just think that it's not a great game. And you know who's really winning, if we do want to point a finger, if you will, is it's Google and Meta and all of the advertising channels that these big lenders are spending billions of dollars on ineffectively to create inefficient opportunity. That's where I think we're trying to over optimize is where do you spend your resources so that you get the right business? How do lenders intelligently invest and allocate resources so that they too are not suffering from historic cost per funded loan, which is what they're dealing with today? But again, I want to just reiterate my purpose for doing this, why I wake up in the morning is not to fix business problems. It's an important thing that we're doing to sustain and create an efficient market as a marketplace business. But why I'm doing this is for the people who don't have the upper hand at all, the borrower, the unsophisticated person that's obligated to $400,000, $500,000 of debt that after interest is now 900,000 or million plus. We don't want them to ever suffer. I'm doing this for the person, the individual, as a free tool. It is a free tool. If I didn't mention, it's a free tool that very quickly tells any borrower if they have the best deal or where to get it. And we think that they want that, need that, and that's what we've heard from them.
So as someone who has a very small domain like you, Fincast is awesome. It's a great brand. It's kind of when I first started drilling into your company a little bit, I'm like, well, that's pretty good. That's not bad at all in terms of a name, and then owning the actual, noun or the domain or whatever. It's pretty glorious. How did you come to, I guess it makes sense. Now, were you so I owned the trademark Bright Ray before, like I was able to get the domain. There was like some guy squatting on the domain for, I had to go pay a fortune. Did you also have that kind of problem kind of getting your branding together, or how did that kind of come about?
I'll be honest, we're still figuring it out. Like it's a journey, as you probably know better than most. And, we're really excited because we have an amazing team. And one of our team members is just a brilliant designer who went through our assets and, is actively working on a rebrand. We actually have a new website launching very soon. That's all of our new branding. We updated the logo. We updated the whole brand feel. So like there's a lot that's coming down the pipe that we're really excited about and most importantly, very proud of. And we continue to invest in brand experience because for consumers, especially in fintech, when we're dealing with things around financial transactions, saving, it's all about trust. And while we think that people should trust us, it's not a matter of what we think, it's what people think. So we're doing what we need to do from a brand experience, from an education, from a content standpoint, from a partnership standpoint, from a distribution standpoint, to create that trust, because the tool works. We just are learning from people who use it. I'll give you a really simple example. This is kind of funny to me because I'm not a big social media person personally. I probably need to change that. But we had someone come, like today, all the people that find out about Fincast is totally organic. We've hit a point where people are telling others to Fincast their offer on Reddit, on Facebook, and on forums I never heard of, like Bogleheads, because it helped them so much. And there's hundreds of thousands of people that are in mortgage, home buying, first-time home buyer communities that are looking for guidance. They're desperate for direction. And Fincast is coming up as a prescription for success by people that used it, which is very cool. Again, something that wakes me up every day in a good way, by the way, because there's a lot of things that wake you up as an entrepreneur that are not good. But that said, going back to the trust and everything there, we had someone that said, hey, I'm learning about Fincast from others on Reddit and it sounds really cool, but I went to look you up on social media on Instagram. I didn't see you existed, so I didn't think you were real. And while we may chuckle at that because we're like, oh, we're totally real. Like we've processed, to this point is this little startup around, 75 to $80 million in loans, and we're saving tons of people money. And it's like very exciting in that sense. It's like, okay, cool. We need to establish a social presence because that's how people interpret value from a trust standpoint and credibility standpoint that a business is real. So we need to invest in that. So we just started rolling out some social media content with some of our new branding, which you'll see. And we're launching our new website soon. And we're launching some partnerships and marketing strategies that we think are going to be really exciting for the brand. But yeah, going back to some of the tactical things around stuff like trademark and IP. I mean, if you can afford to do it, you should do it. I get a kick out of buying domains personally. Like it's just fun for me when I have a funny idea, and I probably have way too many that I don't even remember. And like they're good names, but like, yeah, it's fun.
You're driving in the car. You're like, I wonder if Fincast is available or whatever. Right. And then along the way, you picked it up. And then, Bright Ray was just, I had Bright Dash Ray for years. Right. It was one of those things where like, damn it, I'm going to own that now. And I'm going to own that thing. And, as an entrepreneur, like I bet you've got 100 domains, but you're never going to use, just sitting there kind of rotting.
And they're cool. I mean, but I just don't have, we got to focus our efforts, right? As you know, but so candidly, like our current domain is actually Go Fincast. We would like to possibly own fincast.com at some point. We haven't prioritized it. We're having some conversations around that. It's something that we'll consider. It hasn't been, because Fincast is an action item, like the Go aspect of it doesn't like harm our brand in any way. It is something that like, hey, like I'm buying a house. Oh, Scott, awesome. Make sure you go Fincast your offer, right? Or make sure you Fincast your offer. So like we can use either way, but like we really do believe from a brand and marketing and trust standpoint that like we're naming a behavior that exists today that doesn't have a name for it, which is shopping with leverage, creating a bargaining chip and doing it at scale. Like that's what people, by the way, people are doing this. They're just doing it offline because there's never been a digital destination for it. And what we're saying is, hey guys, we created the digital destination for you to do this really painful process that you're trying to do offline with a couple clicks so that you can do it anytime you want, much better than you could do it offline for free.
But it's just funny because you're like, you're in the beginning, you're like, I'm not social media, rage against the machine, right? Oh, forget social media, it's the worst. And then people start measuring you on the existence of you on social media. You're like, gosh bless, I guess I'll do fine. I'll get on Facebook or whatever it is. It sounds like you've reached that. You finally built the machine. Now you're like, okay, fine. I guess we're going to have to go get a Twitter account or whatever you're going after. Right.
Precisely.
How long has your organization been around?
Yeah, fair question. So I actually conceived of the idea while we were originating loans. And I was like, man, there's got to be a better way. Like I'm constantly thinking about ways to incorporate technology into process that could be improved. And so I ended up actually stepping away from the lender that we opened the branch for officially at the end of 2022. We raised our first our first round of fundraising in Q1 of 2023, hired our team or found our team and started building. And that's when we went full time on Fincast. Was early 2023, roughly like end of Q1, beginning of Q2 2023. And we took a process that I had theorized and conceptualized and, you know, tested in daily practice just from a concept standpoint when I was actually helping, people do their loans. And then we were like, okay, I think we can build technology to actually do this. So we started creating technology and full-time Fincast then, and we launched our beta earlier this year, probably about 6 months ago. We've seen some really strong success and indicators that this is something that we should continue to build and continue to invest in and continue to justify. The vision for Fincast is much bigger than mortgage. That's just where we've started. In fact, it's really cool because people that have Fincasted a mortgage offer have come back and have asked us, hey, I'm actually refinancing an auto loan. Can I Fincast my auto loan? Or I'm trying to do an SBA loan business. Can I Fincast my SBA loan? Or yada, yada, yada. So we absolutely have plans to not only expand Fincast from a brand standpoint, but a network infrastructure standpoint that supports shoppers of various products to find the best deal, or at least know that they're getting a great deal. And then lastly, I'd say that while we protect everyone's information so that they choose, and by they, I mean individual borrowers or consumers, who to connect with, which is not only a core value for us, but it's very much consistent with the direction of the regulators. We do think that the data that we have is fascinating around, demand data for particular products at a very early stage in the process, in the transaction, that can actually help inform a lot of different investing for things like mortgage-backed securities and other financial products, like where the money all comes from to fund these. So we have some future business that we're very excited to evolve into, and we have some really exciting things that we're building from an AI standpoint around pricing intelligence as well.
Everybody has that, especially when you have a SaaS product, right? You have that first organic person who filled out your information. Do you remember that day? So you put it out there, you're like, okay, let's see what happens, right? Like a couple of weeks go by, nothing happens unless you do some advertising. Then someone just comes along and fills it out. Do you remember that day? Like, this is probably going to work. This is working.
Yeah, it's funny. So I actually do remember that day quite well. And I was with my girlfriend and we had taken a little road trip. It was over a weekend to the mountains in North Carolina. And we were sitting at lunch at a sandwich shop, actually on a deck overlooking a river, which was just really needed at the time because we went through a pretty exhaustive tech sprint and needed to just recharge for a couple days. And I got a notification on my phone in my Slack that a form was just submitted. And I was like, oh my gosh. And I jumped up and my girlfriend was like, what's going on? She's like, did you get stung by a bee or what happened? I was like, no, someone just used Fincast. It's like, this is so cool. And then of course, like all good stories, they at some point come to an end. So I opened up the details and they had uploaded the wrong document. And so that actually was a really cool learning moment for us because, and even today, I mean, right now, I have to look at the most recent data, but about 77% or 76% of people that try to use Fincast upload the correct document. But again, because the government made the name loan estimate so ambiguous, people don't know the difference between an official loan estimate and a loan summary that a lender gives them. It's very confusing. So we have like 23-ish% of people that upload the wrong document who we have to educate, like, hey, here's the difference. Here's the value of shopping the right document versus this one. And so that was actually a great moment. It was a very big high and then a very quick humbling, like, we're not good enough yet. People don't understand. We need to continue to educate on best practice. So it was a great experience nonetheless, and it's one that's pretty deeply ingrained in my memory, actually.
Yeah, years ago, I started a company. We were selling like lead testing kits. It was our first e-commerce company I had, and and we would weeks, right? Weeks where I was just waiting for to have that first thing happen. And I don't remember where my wife and I were, and I remember getting that ding. I had tied a cha-ching sound to any email coming from my anything with this, whatever. And we were at a restaurant somewhere, and I heard the ching-ching sound. I'm like, huh. I looked at because it hadn't happened yet. It was weeks and weeks, right? And it finally happened. And it was one of those like, I think this is gonna work, or at least there's something here. At least there's somewhere to start. So where does it kind of future? Where do you see this kind of going? Was this? I mean, were you like building this to sell from day one, or is this kind of thing you're gonna just kind of keep building up into more of a giant brand? What is your kind of future? What do you think? Where do you want to take this?
Yeah, it's a good question. So, what I want and what I need to do may or may not align in the future. What I need to do is I need to think about all the stakeholders that are part of Fincast, people who have entrusted or invested in our business that are entrusting me with their capital to put it to work and try to create ROI. Our employees and the people that believe in us that are working, for less money because they are getting a piece of the company and want it to be worth something someday. And same for me. It's a big financial sacrifice building a company like this. So at some point, like, we may entertain at different points in our journey, like being acquired by really naturally, like very strong suitors that would very naturally be interested in our business. And frankly, some of them already are. They've already expressed interest. My vision, though, is that we have an opportunity to fundamentally improve and transform how people shop for really big products online. And until we reach that, I want to keep building. Like, until fincasting becomes as ubiquitous as Netflixing is to streaming video, I don't want to stop. And so if that means like we, reinvest in the business, we fundraise to expand, we IPO, or there's just an opportunity to get acquired and we are able to keep building, like, that's what my dream would be. It's because I just believe people need this. Like, I'll tell you one amazing thing, Scott, that I think is so important. Like, Fincast is the only tool that protects borrowers from things that are fundamentally impacting their opportunity to build wealth, i.e., discrimination and bias. We level the playing field for them by redacting their identity and conducting an effective shopping process that saves them money, but doesn't identify who they are, regardless of whether or not they've been historically marginalized. And this is the first company that I've ever created where people have actually thanked us for making it because we looked out for them. And I just have so much conviction around the need for something to do that for people more now than ever. And we just want to level the playing field for people. I'm motivated by standing up for the little guy, if you will. And not saying everyone's a little guy, but the point is, we all need a hand in this, and technology can be that hand in it. And that's what we're committed to building. And so in terms of the future, we're going to entertain any and all opportunities that come our way. There's obviously very natural opportunity focused on, like, hey, we get bought by an existing comparison shopping site or a company like a Zillow or a tremendous, wholesale lender like a whatever, without naming names. And maybe we do that. But again, like, I just think this is bigger than mortgage. I think we're bringing an offline behavior online for the first time. And that's a really exciting shift that hasn't happened in a long time and doesn't happen very often. It's like email. You used to mail letters, but now you can send them over the computer or the internet. And what we're saying is, if you want to offer shop, you have to do it offline, one at a time, asynchronously, with dealing with all these different providers. But we think that there's a way to do it with technology online. So we want to, and by the way, that's why my team is who my team is. Like, we're all bought into the vision. We believe that fincasting should be something that people do, because if you don't, you're going to miss out, and it's just free and easy. And why not? Like, there's no downside. And we want to be part of the lion's share of transactions that occur, at least in the US, and maybe we'll expand globally, but we're focused on the US market. We want to be a part of the more than 50 million transactions that happen every year by consumers that are seeking personal finance products.
It's the biggest investment, well, just specifically home loans, right? It's the biggest investment, typically the average human's going to make. And it's a quarter point, it's an eighth of a point. It's a lot of freaking money. And then you add the like, to your point, the millions of transactions. It's billions and billions and billions of dollars. And the current tooling out there is not awesome. It just isn't. It's just not that great. And I kind of dig the idea where, okay, well, go get your first offer. Right? Let's go start there and let's work our way back. And you've kind of, by doing that, you removed kind of the looky-loos. You're actually only dealing with people who are really trying to find they took that first step, they took that first ding on their credit, right? To actually go get the actual offer itself. But I feel like your only headwinds are going to be the big dangerous banks out there that see you as a threat, or the other financial institutions are like, whoa, we don't necessarily want to do this, Ben, right? We want to kind of make it difficult for everybody. I mean, have you kind of seen that at all? Are you moving the needle that much, or are you kind of still headed in that direction?
So no lender wants their offer to get chopped, but every lender wants to beat someone else's offer. And like, I can say that with confidence because I was a lender and I saw it every day. That said, there will be the late adopters. There will be the early adopters. We have lenders signing up for Fincast to get access to our network completely organically today. That's like a testament to like the value that we're creating for lenders. That said, I learned from one of the founders of Trulia, a real estate tech company.
Love Trulia. Yep.
Trulia and Zillow were competing to be the market leader. And Trulia's fatal mistake, as reported by their leadership, was that they tried to satisfy both sides of the market equally. So they were trying to appease realtors, real estate agents. They were trying to appease home buyers, prospective home buyers, all the same. Zillow, on the other hand, said, we're going to piss off a bunch of real estate professionals, but as long as we give consumers what we want or what they want, we're going to be doing something right. And the challenge with Trulia was like, they diluted their value proposition and distracted themselves by trying to do too much on both sides. And so what we've committed to from day one is it may hurt a little bit on the lender side, but it's temporary. But if we can do what's right for consumers, we believe that consumers will trust us, will use Fincast, and lenders, frankly, will find that Fincast is the most effective faucet of demand that they can get anywhere, period, for borrowers. And so as long as we commit to doing right by the end consumer, which is our commitment, we will have lenders that want to work with us.
Benjamin, we're out of time. It was awesome talking to you, and I'm going to. So I'll start sending your site to anybody who will ask in terms of where do you get comparison, right? Because that's the thing. That's the thing. You start one spot. Now let's go find what's actually possible with the documents. You've already took the time to bang on your credit to actually make it happen. Benjamin, thank you very much for doing this.
Scott, it's a pleasure. Thanks so much for having me.